Let's get into some analysis of the kind of activity we're seeing right now within the political context with Paul Mwai, who's the CEO of AIB Capital. Paul, thanks so much for joining us this morning. We've got, as I said, the polling stations opening up today for what is said to be a very tense presidential election. Run us through the sentiment on the ground at the moment.
I think the sentiment is quite optimistic of a peaceful election. I think Kenyans are determined to ensure that we get a peaceful election this time round. Despite the isolated cases of violence, I think we've seen everyone come out very peacefully, very chatty, very positive in terms of the outcome of a peaceful election. Have you taken to the voting booths yet? No, I haven't. The queues are rather long, so I'm hoping that they will die down a little bit later on in the day, and I shall cast my vote at that point.
Okay, let's take a look, Paul, at how you're seeing this all play out, because this year's frontrunners are obviously Prime Minister Raila Odinga, who lost in the 2007 race, and then Deputy Prime Minister Uhuru Kenyatta as well. According to the polls at this stage, we've got both running neck to neck and well ahead of the 6 other candidates. Take us through the sense you're getting in terms of the race that's being run here and the sentiment around these 2 candidates specifically.
I think, well, for the business community, I think what they would like is a first round, and I think everybody in Kenya would want a first round win for either one of the candidates and resumption of business immediately after that. However, it looks quite likely that we will go to a runoff. When we look at the numbers, it's very unlikely that they would have gained 5% vote to get to the 50+1 in the 1 week period. So it's going to be a neck and neck race, and most likely going to a runoff, which should take another month to decide.
While first and foremost, the markets want a peaceful election to be held, certainly one that does not follow on from what we saw back in 2007. Do the markets have a preference in terms of who would be a more market-friendly president elected?
I don't think the markets have a preference. I think the market wants peace and continuation. I think there are a lot of opportunities coming out of devolution and the change in government and the implementation of the new constitution. And I think the market are saying, regardless of who is elected, we are going to see some positive changes in Kenya, and we are positioning ourselves to take advantage of that.
Well, certainly we'll be keeping an eye on the developments today as they unfold, Paul. Let's turn our attention to some of the company news that's filtered through. As I said at the top of the show, we've had quite a few banks reporting, and CFC Stanbic Holdings coming out with results late on Friday, posting a 64% rise in its pre-tax profit, maintaining the trend that banks are reaping from the region's fast-growing financial services sector. Your overall impressions of those numbers released relative to the others that filtered through during the course of the week?
I think CFC Stanbic has shown some impressive results. 64% increase is definitely commendable for CFC Stanbic. It is very encouraging, but overall on the banking sector we've seen positive, with the exception of KCB, which was slightly below expectation. All the other banks have really shown a quite impressive performance in terms of the numbers, and I think that's very encouraging in terms of the stock market going forward. I think we were looking at PE ratios on the banking sector still remaining below single-digit PEs, which tells us that there is still growth potential. There's still room for further price rises in this market.
We had KCB reporting double-digit growth nevertheless. Paul, is the market being realistic in terms of its expectations of these financial services players?
I think when you look at most analysts, the point is most analysts have made their predictions. They've looked at what their expectations are, and I think for KCB, despite the fact that 14% growth is not necessarily that bad, there was an expectation that they would do better in terms of their numbers, and therefore the disappointment. And I think investors also expecting a much higher, slightly higher dividend of about 2 shillings 30, 2 shillings 20. They came in at 1 shilling 90. That kind of affected the sentiment. It's just perhaps a mismatch of expectation. However, that doesn't make the bank bad. I think they've still got a challenge in terms of the cost-income ratio, which still remains quite high at 57%, and perhaps has always been the nagging problem for KCB as a bank. And I think analysts will be watching as to what measures the new CEO will be taking to tackle that major problem, because that has the potential to unlock a lot of value on KCB if they can bring down their cost-income ratio to perhaps what is more or less the industry norm of about 50%.
A favorite for you within that space, Paul, where would you be a buyer right now, looking at the fundamentals of the company, but also looking at valuations?
Looking at valuations, I think when I look at the growth potential of the banking sector, I would still go for the banks. Equity, CFC, Barclays still look quite attractive. Even KCB. I think overall on the banking sector, I think we are encouraged that there is good potential on that. I think on some of the industrial stocks, cement sector, Athi River Mining and Bamburi also show good potential and well positioned to take advantage of the devolved government that should be coming after the elections. So there is again some positive sign on that particular category.
Outside of the banking arena as well, we've had fuel marketer Ken Alcobo making headlines on Friday, saying that talks to allow Switzerland-based Puma Energy to take it over had been terminated. Market reaction to that news?
I think although the market had to some extent expected this, because the discussions had gone on too long, and when you go on too long, the likelihood of it not coming out as a positive result is increasing, and we'd seen the price now begin to adjust back down to about 13 shillings. I think eventually, inevitably, after the announcement, we will see a further drop in the price. That is my expectation, as the reality now checks in that that's not going to be, and you're not going to be getting a big payment from Puma on the takeover.